Last week was kind of interesting. We saw Disney talking about their new improvements, Dropbox sending their workers home, Peloton recalling some pedals due to some injuries, Citigroup saying that Amazon Prime Day was disappointing. So today I will talk about all that, plus do a quick overview on last week's earnings report and give my expectations for next week earnings on Tesla and Netflix. Please smash that like button and subscribe since it really helps my channel out. Also remember to claim your 2 free stocks with Webull by signing up and depositing $100. The link for that is the first one in the description below. Another red week after so much uncertainty. The S&P 500 ended down 0.50%, the Dow Jones 0.23%, and the Nasdaq ended the week down by 0.7%. After a downtrend week because of the stimulus uncertainty, unemployment claims continues to rise. Apparently the virus cases number are rising in Europe. Still, on Friday, Wall Street tried to recover from its longest streak in nearly a month because of strong retail sales data, since US retail sales grow for 5th month in a row. Retail sales jumped 1.9% during September, which more than doubled what economists were expecting. Clothing stores rose 11%, department stores 9.7%, auto sales dealerships were up 3.6%, and sporting goods 5.7%, meaning that maybe the economy might be recovering a little bit faster than what economists are predicting, since consumer spending makes up to 2/3 of all US economic activity. I would expect US retail sales to grow faster for this last quarter, mainly because holiday season. We have Halloween coming up, Thanksgiving, Christmas, and New Year's. Then between Monday and Tuesday, Disney stock went up 3.87% because of their most recent plans to improve as a company. We all know that Disney has suffered and continues suffering since their theme parks, cruises, and hotels were closed for more than 4 months, and some of them are still not able to go back to business. Because of that, their main source of income was their media and entertainment divisions, such as ESPN Plus, Disney Plus, their movies, and more. Last week, they announced that they decided to restructure their media and entertainment division as streaming became the most important facet of the company's business. On Monday, the company revealed that in order to further accelerate its direct-to-customer strategy, it would be centralizing its media business into a single organization that will be responsible for content distributions, ad sales, and Disney Plus. As of their latest consumer report in August, they had 100 million paid subscribers across all their streaming platforms, which most of them are from Disney Plus, which has been increasing even more since theaters have been unable to recover, and also because Disney started streaming their new movies in Disney Plus, just like they did with their new movie called Mulan. Analysts are still awaiting word from Disney about how Mulan fared after Disney removed it from theatrical release and sold it through Disney Plus for $30. Obviously, as a Disney shareholder, I also want to know how Mulan did in comparison to a movie released in theaters, because that would be a huge impact for Disney if they were able to get the same or better numbers than with movies that were streamed in a theater. We already saw companies like Twitter and Square making their work from home policy permanent due to the pandemic. Other companies like Microsoft said that their workers will have more flexibility to work from home, and now Dropbox is the latest San Francisco tech company to make remote working permanent. I posted a video on Thursday talking about Dropbox and wanted to mention how this could affect the company. So they decided to extend its mandatory work from home policy until June 2021 and will be setting up Dropbox studios for employees who really need to meet or work with others in person. Other than affecting the companies, it also affects the real estate market in the area, since without the pressure to go into an office every day, some people have chosen to move out of Silicon Valley and look for more affordable and larger options. That's pushed down the cost of rental housing in San Francisco, historically the most expensive place to live in the area. Now, Peloton stock dropped on Friday because they needed to recall pedals on 27,000 bikes after reports of injuries. The recall applies to the PR70P pedals, which were placed on bikes that were sold between 2013 and 2016. Peloton said it has received 120 reports of pedal breakages and 60 reports reports of injuries due to the first generation of pedals. Of those injuries, 5 people required medical care, including stitches. Obviously, this affects the company's image and reputation and maybe future earnings, but because of the pandemic, their sales skyrocketed as more people needed to start working out at home when gyms closed. Because of that, Peloton's last quarter sales were up 113% in comparison to the same quarter last year. Now, tech's influence over markets eclipsed.com bubble peak. What this means is that tech companies right now account for 40% of the S&P 500, which is higher than the dot-com era peak of 37%. These companies are the ones that have led the S&P 500 to maintain near all-time high during the pandemic. Trends like remote working and cloud computer are driving growth at these firms, helping tech companies expand their businesses when many are struggling. Even though that is excellent for tech companies, investors are worried that a significant pullback could bring the market down. History has shown that previous peaks in a specific sector in the S&P 500 ended in a big sell-off. It happened during the dot-com bubble, it happened in 2008 with banks, and investors are worried that we might see a huge sell-off in the whole market because of few tech companies. Now, for my Boeing investors, Boeing shares rise on 737 MAX optimism. I would imagine all of you already know all the problems that Boeing has been having with their 737 plane, which was not a safe plane and they needed to take it out of market, obviously affecting the company a lot, and they have been trying to solve that problem for so long to be able to take the plane back into business. Finally, Executive Director of European Union Aviation Safety Agency said in an interview with Bloomberg that he thinks proposed changes sufficiently address problems with faulty flight control systems implicated in 2 fatal MAX crashes. Because of that, Boeing stock went up more than 5%. Then Amazon stock dropped more than 2% on Friday just because Citigroup said that Amazon pandemic delayed Prime Day may disappoint. Citi checked out Amazon web traffic information and said that it was basically flat year over year compared to the 8% growth it had in 2019. Analysts said that this might have been because they moved the Prime Day event from July to October, plus we are in a pandemic, and also because of its proximity to holiday shopping. Still, Amazon, the king of e-commerce, have benefited a lot during the pandemic because of the acceleration in e-commerce around the world. Now, obviously, other retailers have seen how Amazon Prime Day actually boosts their sales, and companies like Best Buy, Target, and Walmart offer holiday deals during the same week for the very first time, to piggybacking of Amazon. Also, Walmart decided that they will offer Black Friday deals over 3 weekends instead of just one day after Thanksgiving, and I would expect some other companies are going to do the same just to boost their sales. Now, last week we had huge earnings from banks, Delta, and more. Wells Fargo reported a weaker than expected profit for the third quarter since their net interest income fell 19% year over year, but were able to improve in comparison to last quarter. Also, their CEO said that the bank should cut $10 billion from its annual expenses, and also that the bank is planning to leave some businesses that are not core businesses for the customers, for example, the private student loan business. Obviously, their quarter report was not the best one, but if they are able to reduce expenses, eliminate non-necessary businesses, and most importantly, improve their reputation, it could be an excellent investment in the long term, but in the short term, might be a little bit risky. Bank of America also reported earnings and was able to beat expectations in earnings, but not in revenue or net interest margin or trading revenue. Then JP Morgan and Citigroup actually posted results that beat analyst expectations as they set aside less money for defaulting loans. Even though banks are excellent dividend stocks, they will continue getting affected as interest rates maintain low, and also because of the pandemic, a lot of people are not paying their loans. For the airline side, Delta posts another massive loss. One's recovery could take 2 years or more. Their revenue dropped 76% in comparison to the same quarter last year. Still, they also said that passengers are starting to return and bookings for Thanksgiving and Christmas are looking good, slowly but steady. Now, for next week, we have a tech-heavy earnings report week. We have Netflix, iRobot, Tesla, Chipotle, Coca-Cola, Southwest Airlines, AT&T, Intel, and more companies reporting earnings. Tesla already said that they produced over 100 145,000 vehicles and were able to deliver nearly 140,000 vehicles for the third quarter. So they delivered 15,200 of Model S and Model X and 124,100 of Model 3 and Model Y. So if Model X and Model S has an average price of $97,000 per vehicle and Model 3 and Model Y has an average price of $51,000 per vehicle, I expect them to report a revenue between $8.5 to $9.2 billion for the quarter, according to their average vehicle retail price and their energy and service sector previous performance. For Netflix, analysts are expecting them to report a revenue growth of 21.6% for the quarter and 23.6% for the year, and have an earnings per share of $2.13 for the quarter, which would be excellent for the company. Also, analysts are forecasting Netflix stock price to be as high as $670 or as low as $220 within the next 12 months. Obviously, this is a very wide range. Hope you enjoyed the video. Remember, I have a completely free Discord group chat, which the link for that is down in the description below. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.